Okay, hi there guys. Sorry for the delay there. I had a few issues with trying to send out the alert, so I sent out the push notification. But anyway, let me know if it's coming through okay. Probably a few more coming a bit late as they look for the push. So normally I just send out the alert, excuse me, and then hit the go live button and it pops up so you'll get a notification from YouTube. Problem is if the alert doesn't come out, you have to go into YouTube, I think. I just haven't been able to send the alert. Go, Lauren. So I'll just start yabbering away. Okay. All right, guys. So welcome to TradeSetup. I'll get into it. Um, welcome to live stream. What date is it? 30th of September. So tomorrow, the new month, new trading month, October, 1st of October tomorrow. Pretty sure. I've got my days, or otherwise my mum's birthday on the 2nd is going to be a bit strange. Call her up a bit early. Um, anyone that's new, feel free to join us at trade_setup, the top left-hand corner on Twitter. Join us on Facebook. And the bottom right, you can subscribe to us at YouTube. What I haven't got on there, which I probably should get organised, was probably rather than Facebook worry about, is TradingView. So anyone that's got TradingView, even the free version, paid version, you can link into us, or if you search along the top, which I can show you now. Just give me 1 second. I'll actually get up and I'll show you exactly where. Here we go. So if you search us along the top, it took me ages to figure this out. If you hit ticker, drop down, hit people, and search TradeSetup, sorry. You should get this pop up here with the little screens. You'll be familiar with that, and just subscribe to us there. You can follow us there. So we've only just got up and running, and we're starting to get a few views, which is good. But we're going to start to build that up, put a bit more on there. You can put some videos, and just another good little just resource, I guess. So feel free to join us in there, and then we'll get up and running. So that's the other thing I was going to mention, rather than worry too much about Facebook as such, but it's the other thing to join us in. G'day, Pete. That's it. And just remember, any advice we do give is general advice. It's just our opinions. So we've got to say that each time. I'll minimize that. And today we'll get stuck into it. So what I'm going to go through today, I thought I'd spend a bit more time on just a couple of trades, and I want to discuss with you. So we've got, everyone knows, Daniel, who's in here. He was in this morning. I don't know if he makes it to the live show at 12:30, but he's in at 9 or 9:45. Sent through a couple of emails regarding some trades, and yeah, it's really worthwhile. So I got back to him then. I thought I'd put them up and show everyone on the stream as well, because I think it's worthwhile having a bit of a chat. It's on I think it's in gold. So it's a couple of trades he did, 3 trades. And look, they were great, apart from there was one sort of comments I put on the middle one, the second trade, I think it was, which we'll discuss, as long as I can remember them. G'day, Gino. And we'll also talk about a trade that I saw, and this just goes on to entries and how important I view entries. And I think sometimes it can just define. I mean, anyone can see a bid zone, mark it up by getting the technical analyst 101, get the book out and read it, and find out, okay, this is a support here. Sometimes they're wrong, sometimes they're right, but if you can just mark it up, it's not the biggest thing, and you don't really have to have any understanding. Sorry. 1 second there, guys. It's Mum that tends to ring at the wrong time. If you're listening, Mum, stop it. So anyone can mark up support and resistance, but I think it's the way you attack that. And obviously, there's a more a refined approach, or how would you say? I think it's a better approach of attacking where you want to trade with regards to liquidity into a trade, with regards to liquidity into a market. Where do you expect some sort of action or reaction? Now that's one point, but actually trading that zone, I think correctly, this is my view anyway, is what a lot of people just don't tend to do. And I think unless you have spent a hell of a lot of time going through your stats, and I'm talking about people who just sit on the bid, say you mark up a support, I'll just sit on the bid, goes down there, I'll put my buy order in before it gets there, and then I'll have a stop, And this is probably more not so much share because people will just buy when it's cheap and sell when it's high. That's the aim of the game, I guess, with the majority of traders. Not so majority of investors, I'd like to say, rather than traders who people trade the market. But when you're talking about indices and currencies and things that could really move, um, then that sort of approach to me is just asking for trouble. Just sitting on the bid with a stop because the market will charge through, stop you out. They may not even look back. So you're not giving any opportunity to see whether you're going to be right or wrong. So before I go into too much to that, um, yeah, that's what we'll discuss. I'll show you a chart that I picked off, and I found it interesting because I know this person's got quite a few followers. Going nuts. It's going. They've got quite a few followers. So when you're giving that sort of information out, and it's on Twitter or it might be on, I don't know, whatever the other forums you have where it's been posted. I think if you're giving them the wrong information, it leads them down the wrong track because you're so called a professional trader. A lot of these people on Twitter are not. And I guess a lot of people, if you can realize that, that's fine. Even if you don't want to follow me, don't mind. But I think there's a lot of information that's circling out there, which I don't think is right. And I thought I'd just talk about it and the reasons why I don't like it. Um, and again, why, if you do it that way, why you have to put in the work and hours of work to make sure that edge is going to work. And then it comes down to more of where you're picking the zones than just picking out support willy-nilly. So yeah, we'll talk about that in a minute. And then we'll have a look at we'll just spend some time looking at some charts, so whack in anything that you want to look at, anything at all, and we'll go through it. Firstly, this morning, we just went through what happened overnight. So refer to that if you want to have a bit of a view on what we're discussing. Not much. I mean, the US was down, it was up in Europe on the back of potential trade related, I guess not euphoria, but not concerns, but Europe was up on the back of that because there was talk that things are going along the right track. But then they come out and the US said they're going to probably take off. They might delist some companies, Chinese-based companies, to stop American investment into those companies or to reduce it at the very minimum. So they're looking at delisting some companies, whether it's on the NASDAQ or whatever it may be. Security concerns. They're touting that, but that caused obviously a bit of a sell-off in the US, and that on the back of I can't remember who it was, a Chinese trade negotiator, one of the, let's guess, top tier, was talking up, have a bit of a swipe at Trump and the US administration on regards to trade-related issues on a UN summit. I can't remember what you call it, but he got up and spoke, obviously, and had a bit of a swipe at them. So when you got these two things happening on either side of the fence, I really don't expect any sort of answer or something to come out of this meeting on the 10th, 11th of October. So in about 10 days. So I think if that's the case, if there's not any step forward, and they can come and say, yep, it all went well, they can do that again. I mean, they've done it many times in the past, just coming out and say, yeah, we had great talks, but we haven't come to any sort of agreement. And then go away and say, well, next talks are scheduled for a month. So it just keeps prolonging this thing and nothing happens. And meanwhile, tariffs actually continue to be hurting the economy in the US and is the main problem. But the thing is, the market's still creeping higher. I think sooner or later that tide will change and people will sort of demand, or markets will demand some sort of resolution to trade because it's crimping, obviously, Europe quite a bit. Whoa, CC up 140%. Funny enough, I still got a bit of that. I just could not get out. That's interesting. What have they done? Wow. Wow, that's awesome. Oh, I'm going to hold that one then, aren't I? That's probably just made me a few grand on the back of that one move today. Perfect. All right, let's go. Like I was just saying, so this is all about the year. I still think there's a lot of headwinds out there. You're talking trade, you're talking, there's still issues in Hong Kong. There's all these sorts of little things going on. There's still headwinds. The market's still ticking along. They're still really just ticking along purely because of one thing, the US economy. And they're not growing. They're just not backing off. They're actually holding ground. The US economy is around the 1% mark, growing at 1%. So they don't want it to go under that. And it's doing okay. The consumer's the biggest lifter. Now, consumer data came out on Friday. It was a lot worse than expected. And I think that could have added to the sell-off. along with that and trade issues, because if they're the major support of the economy and the consumer starts holding back or not spending basically, then they've got an issue. And I think that if that starts to get showing the data, we're going to have problems. All right, let's get into what I'm going to get into. I'll start first with the trades. All right, so these are this one. All right, so this is from Daniel. Sell, sell. Oh, I've still got a bit to make up, but yeah, it was a rubbish position for a while there. It's probably getting back there. It's getting back. It's probably only back to even, but the move today, God, was actually pretty good. I saw that happening. If anyone, I'm going to be a real cynical bugger. I hope this doesn't offend anyone, but go and look at the recent action. If we can drill down, this action here. If anyone tells me that there's not a leaky boat in the majority of shares, you've got to be a big blue chip to not have a leaky boat, because I think their compliance and their risk of getting away with it is a lot lower. But in companies like this, you see this pop up with a bit of volume, and that's decent volume compared to the last few days, and it starts to take off. They hit in the offer. They're not just sitting there waiting for the offers to come to them, which has worked the last year for CCA. They're sitting there and buying it up. So why would you buy it up in such a, lack of a better term, crappy stock? You know, it's because you know something, and you know that potentially is going to be a good little rally. So look at this. I mean, all of a sudden, news has come out, news is hitting, we're up 40, 50%. So someone knew something. I mean, without a shadow of a doubt, I believe that. And this happens time and time again on shares. So, and that's why I think it's on these little speckies. It's important if you're going to base your trades or going long, you've got to have some volume there. You've got to get volume showing you something. This is another one, I guess, I'm in that's a bit small and a bit crappy. HMX. Here, volume's picking up. And if you look at this volume on this rally, completely different to anything else that's happened in the past. Even this little spike, bugger all volume. But that volume is big. So to me, something's brewing. And it's not this sort of pullback. The volume's dropping off. A little bit more volume in here. Maybe it's not really ready yet. But I think, yeah, I think this one is brewing too. So if you're looking at the little speckies and they don't have volume, it's going up, steer clear. Because it's easy to be ramped. If it starts to get some volume, where was the other one? The CLI. So this is one that I got into a long time ago, somewhere around here, 3.4, I think it was. And I got out in the spike, it come back, and I got in a couple of times. I didn't get the bulk of this move. I think it was from 6 point something onwards, up to 9. I didn't get that, but I got in and out a few times. But look at the volume. Nothing, nothing, nothing. And even this little rally, a bit of volume, but nothing. All of a sudden, volume comes in for a few days, but the price doesn't kick off. So that's not a bad sign that something's happening. There's a bigger position being built. So, you know, it's always worthwhile taking note of that. Or if you're not going to trade it, keep it on your watch list, because you're probably not going to get much of a chance of something like CCA that comes out today. It has actually opened and it took off, didn't it? When did that come out? 9:45. So before the market opened, and it probably still caught a few people off guard because it actually hasn't gapped up. It's traded up. It's gone straight up. So that's good. We'll just see if we can get a second day rally and really start to kick off. Anyway, where was I? So I'll go over these charts. That's it. So where I was. So these are a couple of charts from Daniel. So this is, he's just trying to practice around what what I was discussing on using the 5-minute chart, using the style of entries we were saying, your moving averages, your 20 and your upper boundary and your lower boundary, just by trying to trade the same way, I guess, when we say inside out. So you're looking for that trade that goes from the inside, from the middle average. So it's your average, start to extend either up or down. And then you've got your outside in style of trades where it might have been something like this, where it's really spiked down hard and you're looking for that outside, that return to the mean, to the norm, because that could be just an aberration, or if it's the start of a trend, someone's going to have to book profits sooner or later. If they got short here, for instance, and it dropped, they're going to come to a point where it stops. Everyone's questioning what's going on, and you're going to get these bargain hunters jump in. Probably sellers are not going to jump in because it's already gone pretty hard. Look for that first pullback, but either way, you're going to get some sort of opportunity when it reverts back to the mean. So there are two styles we've been discussing, and Daniel's been sort of obviously watching that. we've spoken a couple of times, and this is the first set of trades he sent across. And I think the first one, when you look at that, a sell, +5, it obviously marked up a resistance zone here, so the pressure's on from the sellers. Understands that. That's good. So you got this little pop up here. Okay, you got another little resistance zone where sellers are starting to step in. So ideally, if you're looking at it from a sell point of view and you're looking from an inside out point of view, great. Yeah, I got no real qualm with that at all. And you see that if you just put a support line there, support line up. Actually, let's just draw that. I could draw over the drawing. Give me a second. Come on. Here we go. So you've got a bit of a support line through here. You know it's broken down. So the first thing you're looking for is a shoulder, or we call a shoulder, lower high, because you got one reaction, maybe consolidation through here, and then another reaction. So he's traded off the shoulder, or he's traded off the lower high. Good, you know where your risk is. Maybe, I'm not sure when the entry was, maybe on this red candle here, then you've got your risk just above. You're not risking much on the breakout below. And then just see if you can that extension potentially down to this bid zone again, or lower. Okay, as it played out, I think it took it off for a few points, and then it's continued on. Which, nothing wrong with that. Nothing wrong with taking something off. And this is all practice. It's trying to get your eye in, and then you start to work on. So my past, I've always worked on the entries, played around with that, and then once I felt confident that my strike rates are pretty good, then I'm obviously working on the exits, because it's basically just flipping it over. Why you get in is why you get out, essentially. And that's been probably a hard part of my game, which I've mentioned in the past. But getting out's is one of those things. So the more you do, if you can get 60% on the right side of the market where you're shorting, your entries are right, or your right side 9 times out, well, say 6 times out of 10, you're on the right side. If you got the 4 times, you can just accept that. No one really gets 90%. If they get 90% out right, to me, that's rubbish. I mean, eventually they're getting caught out, and they're not. They could still be, a 1 for 1 or less. I think if you're getting 9 out of your stops are 2 to 1, then what your risk is, you got it really wrong. You got it inverted. So I think generally, if you can get around 50, 60, maybe up to 70 if you're lucky, even if you can get 70% right, if it's 1 to 1, still makes you money. But I think strike rates generally, I've always been around 60 to 65. I think my share alerts are actually a bit lower, but the payouts are higher. And then if I can get 60% right at 2 to 1, fine. And that's always what you're aiming for. So if you get your strike rate, you're going to be wrong sometimes, and you're just trying to take advantage of when you get it right. So the next thing would be, at 2 out of 3 on the right side of the market here. So if you can let it run as much as possible, then great. If you don't, and you're always getting 1 to 1, look, that's still fine if you're getting 65% right. It doesn't matter, because that 15%, or it's even more than that, isn't it? Or was it somewhere around 30% of your trades are winning? You only need to win 1, and then your net, you're going to be up over time, and you just rinse and repeat. And then you refine getting out. How do you get out? Why do you get out? Should I let it ride? And you start to get better at letting it ride and inching from 1 to 1 to 1.5 to 1 to 2 to 1, so on. So I was sidetracking a bit then, but this, I think, great shoulder trade. Yeah, so I just saw you pop up there, Pete. So there's a guy we used to follow when I first started back 2010, 9, 10, something like that. That's when I first hooked up with Davin and started learning from an online forum. I paid for the forum, watched him, he described his trade pretty much like this. I would send in as many trades as I could to Davin. I don't mind if he talks about them online. I don't mind looking like an idiot if I got a lot wrong, because ultimately I'm the one that's going to learn, because I'm going to learn the best. The only person that knows what he was thinking trading this was Daniel. I don't. Daniel knows exactly what he's thinking. So anything that I can discuss to help him get his thought patterns going along the right direction, I think is going to benefit him longer term. And that's what I was always looking at with Davin. But there was a guy out of the US, a trader that I also listened to, who was getting somewhere around 30, 40%, right? But he didn't care, because he was making good money. It's when he gets it right, he was doubling. So he might enter a partial position here. Okay, you get stopped out. So be it, he makes a small profit or a small loss. But when he got it right, he was picking the trend. So his aim was maybe chopped around trying to get into the trend, maybe getting chopped around a bit off a key level, but when he got it right, he would load up. You know, when you get your first pullback, people might be getting out. He's averaging down or averaging in. And then so when it comes to the, I guess, when the market's starting to be stretched, he's at a full position and he's riding it and he's getting those massive winners. You know, it might be 10 to 1. So he would say you only need those a few times a year. And getting 40% or 30% right doesn't matter. Because when he's taking losses, 70% of the time it's on small, but when he's taking his wins, they were big. So it said more than that, from his statistics, more than outweighed any of the losses he was taking on one or two trades. And that third or fourth trade for the year, even, it was cream. It was just cream on top. So yeah, it's right. As long as you're taking your stats and you know what's happening, if you're getting 30% right and you're still getting 1 or 2 to 1, I don't think it's going to work. So the less you get right, it's probably because you're opening up the trade a lot more or more often. Every single trade you're opening up a lot, which, okay, you're going to take more hits because it's going to revert on you. So you might have been sitting up 1 to 1, 2 to 1 in profit, and it reverses on you and stops you out at a small loss. So you count that as a loss. So that would happen more often when you're letting it ride a bit more. My theory, especially with, as you know, with the alerts, takes them off, book a partial as soon as possible. It's the same when I'm trading futures. I might have three, sort of group it into three positions, or some 2 or 3, depending on how I'm feeling. I'll take half off and see if that second half or the third position I can let it run as long as possible. And that's where you're going to start beefing up your results. So yeah, there's different approaches. Or you just, if you're looking for those major trends, you might be entering on a portion. And then when you get confirmation, more confirmation, when it goes from the unknown to the known, by the time it hits the known, and every man and his dog's buying it because they've heard about it in the taxi for the taxi driver, that's when you're loaded, and you've already banked something, or you've got a good solid base built up, or I know it's only paper gains, but it's already locked away in a way, because if you do turn around and get stopped out, you've locked it away again. But when things are going the hardest, you're fully loaded. So you can pick whatever style suits you and whatever way you want to trade. It's up to you. And it's horses for courses. It's not what suits me doesn't suit you necessarily. But you got to find what works for you. I mean, I'm happy to take 1 to 1 all day, or maybe over 1 to 1, slightly over when I'm intraday trading anyway, because I know that I'm sitting around 65%. Don't care. Happy to do that. So yeah, back to the trade here. So that was, no qualms with that. Selling, probably bought back into support. That's good. Even the third one, again, it was that inside out style of trade, which is good. That's, again, you've got it on a nice little candle. And if you can see it, you're looking for continuation. It's reacted off the support and then started to roll. Okay, that's good. You're just going with the flow. You're going with the pullback. You're going for inside out. So that's potentially the first sort of a key pullback you got in what could be a break of this support, which it did end up being a break of that support, and a trend lower. And you might get that extension from that high to low, extend from high to low. You might get it down to 25. So you're looking to ride it down and just see what happens and really tighten it up. If it gets down there, and then if it goes further, great. If it doesn't, okay, not so great. So you're going with the trend in this case. Now, the only sort of issue or comments I had was against. I'll get up the second chart, which I did mark up, I think, here. So I think it was just against the trend. And really what you're looking at here, you could probably see the comments here. I think prime off that was a retest. You've got the market pressed down initially, reacted off, went a second time, and you can see that all those wicks that were starting to get held up. Then you got your higher low. You could have gone long off the higher low because this area was a confirmed major higher low. Okay, so that's your first step if you're taking it from here. All right, so there, nothing wrong with going long. You can see the MAs essentially sideways. That's consolidating, chopping around, obviously. But if this is a confirmed higher low without seeing anything past here, you've got another higher low here. Because the market powered down, went straight back up again, retested that high. It's come back down, tried to go a second time. You got a minor double bottom, and that double bottom is all part of potentially a higher low, and you're going off a shoulder long, great. Okay, but at this stage, what you're doing is coming off a confirmed lower high. So all of a sudden, you got more of the picture coming out, more of the picture starting to play out, and you've got a lower high, sorry, a high low here. Okay, then that's negated all of a sudden. So sellers are stepping in rather than letting it get up to 1535. They're stepping in at lower levels and starting to pressure it lower. So then you've got to question: is this level going to hold up? And am I on the right side? If I'm here and I get this minor level breakdown, I'll be out straight away, booking a small gain, and then potentially looking for this short, exactly where Daniel entered the first trade. So trading this second one long, that's probably the only thing. I mean, and it wasn't really extended at that stage. It was just coming off a support. So when you're trading against trend for a style of inside out, um, you want it extended. If you're trading, sorry, outside in, if you're trading from the MAs in, you want it extended into there. You want it a market that it's extended. So if the trend is up on the major 30-minute and it spikes down for some reason, it's ideal because the overall trend is up on the 30. You've got that spike down on the 5 maybe, and you're looking for that outside in style of trade, and you're looking to people having to get caught off guard and straight back in again. Does that make sense? So whereas this one is just coming off a level, so it's really not an inside out or outside in. It's just off a support level. It's not really off a higher low either. It's really that minute detail they might have been looking at. We're talking candle to candle. There's no swing levels in there. So really that's the only criticism for that second trade. It was more, if you're looking this, you'd be ideally looking for, I can't draw it now. You'd be ideally looking for, just say here, you want to see up, pull back, high, low, and then go, and then buy on the break of a high, low. Because you know that buyers are starting to step in off this level, just like they did here. But they weren't. It's just basically straight off that level. It's like just, what we're going to discuss, putting in a buy at that level and going. I know he didn't do that, but that's a similar style. You don't know where this is going to continue on. It's going to plow through, and you've got no confirmation whatsoever to buy off that level. You just sort of anticipating this is going to hold up again. So just because it's held up in the past, it doesn't mean it's going to hold up again. And you've got to read in the overall structure. Okay, you got sellers, sellers, sellers. Okay, you got some buyers pushing in here and here. That's good. But then sellers are piled in. They've waited for a pullback. They're starting to pile in. So if they're getting out here, they haven't finished getting out, or there's a whole range of people wanting to get out of spot gold, Aussie spot gold, isn't it? Then you don't question that's a key level. So as opposed to minor levels like this, it's as a key level because it's 1, 2 touches here, and you start to get that lower high. So you want to look at the overall structure. So that long off there, to me, didn't make a lot of sense. But all in all, he's managed his risk fine anyway, and it was up. I think he made 3 points. So funny enough, even though maybe on the wrong side of the market, made a little gain. So yeah, that's and the second entry we've already discussed. So sorry, the third entry short made 6, done pretty well. So I think that was the only thing I had to pull out of that, and all in all did pretty well. So it's a matter of having your eye in for what's happening in the major structure and trying to anticipate what's going on and getting a picture of what's going on. And it was only really upon this shoulder when he went short that you realize that this support zone is holding. Sorry, this resistance zone is holding, and it's holding as a lower high. And adding to that being more of a major lower high, then you don't really want to go long because at that stage you don't know what's happening to support. Any questions there before I kick off onto the next thing? I'll just wait a minute. I haven't got a coffee in front of me, which is a bit of a bummer. All right, so no questions, all good, we'll assume. I'll minimize that, minimize that, minimize that. I'll close that, and I wanted to show you this. So this is, hopefully nothing's up there that I'm gonna get in trouble for, but it doesn't know me. I just want to discuss this entry and why essentially I wouldn't take it. So to me, there's a certain things I just disagree in. I don't. Let me just make sure buying zone 1157. Yeah, okay, 1157 to 1237. So it's a buy zone, is it? Use buy zone, target 17. Okay, back up to here. So I think the idea was to buy around here with a target back up to here. Now, yeah, I don't know if that would work or not. I haven't even looked at to see what was going on. I thought this would be an interesting one to discuss because this is the kind of stuff you see quite a lot. And just what we discussed about entries off a higher low or lower high, that's your confirmation for your entry trigger. And when you're putting that together with your price structure, I think that's, for me, and that's what I find. And I know there's going to be times when you do miss out because you're right and you don't get your high or low, or you don't get your entry criteria play out. You know, that's just trading. So I think that's going to be evenly distributed with times when you just get flushed straight out of the market. And I think without knowing what the stats are, and I know there's guys that trade similar to this. I know there's professional traders. There's one particular guy out that, you know, he's trading off key zones and he will sit on the bid with a stop 20 points, 20 pips away. But he's run the numbers and he's done this for years. So what he would do is, this is what I'm looking for. How many times do I see that? And then how many times does it work out? So he knows his stats exactly. So he can, I'm guessing, never spoken to him, but I know that if I asked him what are the stats on that style of setup for you, he goes, you bank, he can whip it out straight away because he's done the research. But if you haven't done the research on that, to me, you don't know whether this is ever going to, you know, one, it could fall short. It could play out and bounce right up like you thought, but it gets a high low here. And so it's not in your buy zone. So why is this a buy zone for me? You know, and why target? Well, I can understand if you're targeting up here, but even then, target up by that high, that's an inside high, I think is completely irrelevant. Does that make sense? So I think when you know, for one, I don't know why that's a buy zone. I don't know if it's a Fibonacci level. Could be. I'm not a believer in Fibonacci, especially when it's essentially here. It's in the middle of nowhere to me. You're not down near a swing low, even this level. So let's just draw that up. I want to draw it up. Probably going to get a bit rude here, but I don't really want to. I just thought it was interesting to talk about. For me, I'll be looking at a zone like this. You know, you're looking down here because that's a previous level and it's touched it twice. So anyone that's bought off that level hasn't been stopped out because you know that stop's going to be below somewhere. Whereas here, there is nothing. And you have to go off this leg. You can't go, oh, because it's traded there, here, here, and here. That's irrelevant because anyone that's got a stop and they're trading off that level has now been stopped out here. If they haven't, they've been stopped out. And if they're not, you know, serves them right. And they're going to cop heat. And that style of thing would never be a profitable trader. So you can see that you're looking at, as you go, you can look at what's happening here, what's happening here. So at this stage, yeah, this could have been a bid zone. Okay, 1, 2, 3. You might have bought it here, but you should have really had a stop below, and you're looking for that to power up to the previous highs, even up to here. That's good. Instead, it turns around and stops you out. So you've got to have a stop under there because the reason why you're buying it is for that support to hold is negated as soon as it gets through there. So that level for me back here is no longer a level. Okay, because it's already been through there. It's already cleaned out the stops. Levels need stops. They need liquidity. If that liquidity is gone, it's no longer a level. That's my thoughts anyway. Whereas this level, traded here, okay, it bounced off there. So if you bought it off, you know, if you bought it, just draw that up. If you bought it here, even off this higher low, great. Your stop's probably below this level. Okay, it's come back and you're taking a bit of pressure. If you're not out, you potentially haven't been stopped out. And then all of a sudden you've got people buying it here again, buying it here, probably having stops below that level. So they're buying it off that level. It's a retest also, and it's failed. So it's a second time, it's a double bottom. Well, like a double bottom. So that dual level is still active. And it's still active here. And it's still active as we're coming down there. But to buy it here, if you're going to buy here, just randomly in the middle of nowhere, I feel that your stop should be below here. Purely because yeah, you can do this and then go straight up. Yeah, you've done well, and then you've taken your partial off here. But what if it goes down? What if you just take that off and it just continues down? You know, you got your stop, you're getting tagged, it's come and retest there, and then it starts to work a massive leg up, takes out that high. Game on, you were right, except you just had your entry and your stop getting tagged. And the stop was use a reasonable stop. So I'm not giving a stop loss anyway, but does that make sense? Just what I'm trying to explain. So there's levels that you'd suggest are active and levels that you suggest are not active. If you're selling it off here, anywhere in this leg down, probably, you got pure good areas to put your stops. As soon as you got this rally, it's taken out those levels, especially here. That is no longer, this high is no longer in play because it's cleaned out. It's traded through it. It's even retested that. Potentially it's bought some buyers in and gone again. So that is no longer a level, that high. If it's going to pull up there, you don't know. And you really should be, before you got this candle, if you're looking for a long and you think it's could be at this green mark, you want to see, because you don't know if it's going to power. You don't know if this, even from here, sorry, I'm getting sidetracked all the time. If it's here and retraces here, you go, okay, that level is going to hold. You don't know that just then. You need a higher low. You need evidence that buyers are going to step in. You don't want to just randomly buy anywhere and randomly buy, even if it is a level, off this level. You don't want to just, this is where statistics come in because that's an active level. It's slightly different to just buying, I find, in the middle of nowhere. Because at that stage, as this market's powering down into that level, why is the buy zone there? Nothing short of a Fibonacci level, which, okay, yeah, then you have to run statistics. If I'm just going to buy off the 61.8, and people will always quote Fibonacci guys, not that I use them. I find them interesting, but I don't trade off them because I think you're going to get it right, but can you trade that level? Okay, so 50% level, I'll just put a buy, 50% retracement, maybe it's here, he bought it here, got stopped out. Okay, it's going to be the 61.8, I'll buy there. Okay, I got stopped out. Oh God, it's 100% retracement. I've been stopped out twice on the way down, purely by just buying without any confirmation that that's going to react. Because you really need, if you're going to buy off that zone, for instance, you really do need a confirmation off a higher low that buyers are going to support that. And you're not the only one looking at that zone. Does that make sense? So I thought I'd put that out there, and we've got about 20 minutes we can talk for. So put up some charts, anything you want to take a look at, and then we'll discuss it. So I hope that makes sense. When it could be worth another full hour talk on active zones and non-active zones, and why would you buy it off that zone? Because that's where someone's probably going to have stops, and someone's either going to be protecting that zone. But when you got it randomly in the middle of nowhere, I just find that silly. I mean, that profit level, if you bought it here, why is that a profit level? I mean, come on, that's just guessing, and it's not because of this high, not at all, because it's already taken off that level. You would have thought I would have been looking for a buy off this level potentially, because I know that there is people who are going to buy off that level, and if there's enough of them, I'm going to find a buying opportunity. But I'd never enter without a high low because I just don't know if it's going to be a level, and I need confirmation that is going to provide me some support. The same here, when it's coming into this zone, you don't know if it's going to hold up there. You've got absolutely no confirmation coming into that level. You only get it after, and that's where your entry should be, after on the rise. Okay, I mean, I know this is all in hindsight, but the same applies potentially here. That could be a level. Okay, maybe it's not because it's just gone through. Why is this going to be a level? There is absolutely nothing for me that says, it's got nothing to do with these lows either, why that should be another level. That's not a zone here, here, and here. That's not, because there's no, liquidity's already gone. It's disappeared. Okay, so that's worth, maybe it's worth going through and just marking up some charts, but I'll take that out. Oh, that's not the one. I'll get rid of that. Oh, BWX, of course, as soon as I put in the profit target, boom, drops. Profit target 2 cents, and that high wasn't in place when I put it, so it got me 2 cents shy of the profit, a partial. At 17, we had it at 19, and it's just backed off. Hopefully that rallies into the end of the day. Look at CCA, it's still going. What's the news? Major milestone, completion of platform. This could get a leg up. Probably get a speeding ticket the next couple of days, but that's a massive push, isn't it? That's a cracker. I know Dav's probably got a bit of this as well. He's probably going to be happy. All right. Let's forget about CCA. No, it makes me happy. AST. Now, this is one. Let's just go through and mark up what we call, what I was just saying there. I think it's just a terminology I might have made up. I've heard it somewhere. An active supply zone, active offer zone. Offer zone being a supply zone too. And everything, for my view is potential until confirmed. I mean, nothing is just, we could have supply there. We don't know until it trades up off it. If it trades like at this stage, let's just draw it up. I've done it again, haven't I? Deleted the wrong one. Talking about this. So this here, you wouldn't say this is a, we know, I don't want to do that, make it thinner. So we know that at this stage, so you got to remember when we're here, we're just coming down into it. So really, we could have a bit of a supply here, here, here. We've got lows here, so that's maybe you bought it into there, but again, I would be waiting for a higher low to play out. Okay, it didn't play out, it's gone a bit deeper, and it's attacked this low. Okay, so we know, and then even this is probably your first indication that buyers are stepping in at a higher level. Okay, they stepped in through here, but it wasn't really a higher low, and it's not confirmed until it gets through, a lower high that's come into play. All right, and that was probably only really here. Okay, so if you were watching this and you go, look, that's potentially, that is a higher low, but it's not confirmed. It could go down from here, and then it's, the sellers are still in control, takes out that level, takes out this level, and just bang straight through, what's that, 150, and continue on its way down to $1 or 50 cents. You don't know what's going to happen at that stage. But as soon as it starts to come off that level and you've got a higher low coming into play off, buyers supporting it here, buyers supporting it lower, then yeah, that is a completely different scenario, because there's supply willing to come in and support that level. When there's no supply, it's just going to go straight through. So you don't know if that's going to be confirmed or not. And as soon as it goes through, then you take away support. It was never support in the first place. It's gone. It's disappeared. So don't come back later and say, oh, it's found off, because then you're just really searching for reasons to buy or reasons to sell. There's no rhyme or reason behind it. It's just, that's not technical analysis. That's just drawing lines on a chart, really. So once you got this high-low play out, and you can see what happened, it started to rally. So you got supplies coming in, potentially stepping in here, building position, and then getting a bit more serious here. The market's come down. I'll draw that in a different color, so we don't know from here. You've got markets coming down all the way like that. We don't know what's happening right up until about here, and then you could say, all right, it's a different story now, and we're in a buy zone. Okay, we got support right up until it's broken there. I don't think there's any sort of confirmation where you'd want to get in. Even here, okay, potentially got buyers coming off here. There's not really a setup for me there. Potentially here, but I wouldn't have taken that. I don't think that's been confirmed enough. It's nothing clear there. We haven't taken out any low. We haven't built a double bottom. We're just starting to come back up. But when you get this failure off this key zone for a second time, yeah, now we're going to confirm double bottom. Now we've got a higher low in place. So that's a lot better signal than anything through here. Okay, so yeah, that's probably a good example of where something's active. At the moment, this is still active because it hasn't come back down and retested. At this stage, when the market's going up, these are active, active high low, active high low. It's come back down. It's still just testing there now. All right, it's still active, because if you bought it in here and you're holding it for the longer term, you've ridden it through there, you thought you're a legend. It's come back down here. You're not confirmed just yet, because ideally you probably have your stop. You give it a bit of room. You might put it at 172 or 170, and you've got an entry from 160. So you're sitting on this profit. You've seen a lot wash away, which it always hurts. But if you haven't taken a partial and you believe maybe off your weekly this is going a lot higher, and you've got your stop under there, you're just going to have to weather the storm. All right, but up until then, this is still active because it hasn't cleaned it out yet. I mean, they had a little washout here, but that's nothing. When it goes through a bit more convincingly, then yeah, say like this, it's got through and it's gone bang. Then yeah, okay, there's no buyers willing to soak it up. But you can get a washout and buyers start to hold it back above that zone, then you know that it's active because it's got some liquidity decks coming in, liquidity buyers starting to step in. You've got, just go there, you've got buyers here and here. They're soaking it up. They're soaking up the selling pressure. So that there for me is, yeah, like you just said, Pete, looking ready to pop. Potentially, yeah. So for me, ideally, I'd just be looking for a rally. I want these MAs to shift up. Look for your first pullback when the market's rising, because at the moment you could go down and just boom, straight back down. You don't know, because we've had really consolidation through here. everything's starting to line up, even the stochastics, bang, bang, showing that selling pressure is easing. I guess if you had another momentum indicator, you'll find that that's probably going from negative to positive, crossing the zero line, say. Momentum's turning positive, the price hasn't quite reacted. So if you get, we're just going through, we're chopping around, dong, 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 and we start to lift, ideally what I'd be looking for, which is probably about where we are. If we can get something like that at a higher level, then I'll be looking for an entry because I know that it's got a higher low, and that's going to trigger a lot of other buyers, I'd say. And then, yeah, you're pretty much going to target up to $2. All right, but that selling is quite strong from, if you were bought it in here off this low, it's gone up, it's gone straight back down again. That doesn't leave me with too much confidence, but in the context of this overall trend, yeah, that's only probably about 40% retracement, which, well and truly, we look at 1/3 to 2/3 retracement, well and truly in the range at sort of the top end. If it holds in here and it starts to build this setup, yeah, I'm right. And I want to give that a crack and see if we can attack those highs again. Even if we make a major lower high somewhere around 190, we're still sitting on 5 or 6 or 7%. And it's great knowing you're wrong and you've locked away again, rather than knowing you're wrong, getting stopped out, just buying it here, finding it going straight back down without some sort of entry criteria. All right, does that make sense there, guys? Pete, does that any make sense? Put up another stock. Anyone else got anything to want to have a quick look at? This is it's only a small one, HZN, Horizon Oil. I thought, well, we're just looking at this. This to me is quite good. So you had the market push down for whatever reason, push down, got to the lows. All right, you've got this little minor inside low, but I'd always say that as a key 5-cent sort of mark. It's gone through the 10-cent. So once it gets through 10-cent to become, everyone knows you go from going from what, 9, 9.1, 9.2, 9.3 to start trading from 10, 10.5, 11, 11.5, 12, and so on. So the moves are a little bit bigger. So a lot of the time they play, so anything like this probably was played around that zone. They lift it through, and they're getting out between 10, 10.5, 10.2, and you're sitting on the offer at 10.5, or you've got to hit the bid at if you want to get out at 10, if you can't get that mid price. And I guess that's different to different platforms, that execution, center point trading, I think it's called. So yeah, they tend to play that, but that's actually quite good. It's popped through. It's been a couple of days jostling around there, but buyers were happy. So it just shows that a lot of the time, if it gets through 10, doesn't go anywhere, it'll come straight back down again because they played it, they've walked away, they've gone. But if it's actually a solid stock and it's getting accumulated for a particular reason, normally good fundamentals, then okay, you should see it lift, which it did. So for me, that's gone off that that trade through 10 to actually a solid potential for a move higher and really starting to lift towards 40. So what you got after that is push up. Okay, this is really all off that one move. It's come back, retest 10, retested highs. So at the moment, right here, you're starting to get that you don't know who's going to win out. Whether it's, and we're talking about here, say, once we get to here, okay, at that stage we don't know because you're looking at this price action right in here. We don't know who's going to win because it's retested that 10, it's failed at the highs, and it hasn't come down to see if it can retest the lows. So we don't know if it's going to straight through the lows or straight up. So I wouldn't be buying it yet. You don't want to see if it fails. Ideally, if it pops through and builds a higher low and you get confirmation, you buy when it starts to rise again, great. And then you're probably going to get that trend start to play out and start to rise and start to lift and looking towards these highs. But instead, the market's come back down, it's retested and it's retested. So after the third retest, especially after what you can see is this lower consolidation. Does that make sense? So you've got a wider ranging consolidation to a narrower range consolidation, but it still is holding 10. And now we're starting to lift. So for me, that's a good sign that this could be a bit of a goer because it spent, what's that? Oh God, I didn't take that. 2008 and most of 2009 so far, a couple of years consolidating. All right. So I know it's only, yeah, they are, you're right. But I mean, if things change, what we're seeing is potentially sellers running out of steam. We don't know if buyers can start diving in, and whether they're anticipating a lift in crude or they're looking at crude, seeing early signs of a lift in crude oil, and they're starting to jump into these oil stocks. And then you might find that crude lags, it starts to rally, and this is already off and on its way and starting to move fast. But yeah, they are sensitive, so that's why it looks to be a line in the sand at 10 cents. That looks great to me. It's just whether it's going to set up. All right, let me just get rid of that. So then, if you go down to a daily, whoops, to the daily, it's if you can hold a high level here, but I don't want to see it just in one candle. If it goes from here, just goes straight up through 15. I'm not interested. I want to see some work done. I want to see maybe a couple of months, a couple of weeks of some solid action here. And you want to see, because it's a small one too, relatively small, you want to see, well, it is small. You want to see the volume lift in. So at the moment, the volume's not really through here, a bit of volume in here, but you want to see that volume start to lift. If it can hold a higher level, say something like this, with some volume, then yeah, it could be worth a go. But obviously, being small, you want to just be careful. So that was one we had, AST Oak. So that's probably about it. Anyone got anything else we want to have a quick look at, or we'll probably call it a day? No. Let's just see the others. That's doing lift back up. QFE, if that can't get up through 52.5, 53 soon, looks like it's doing something similar. So we got QFE as an alert. Come on. Anyway, so we got QFE as an alert. We'll give you all the data. Yeah, it's popped up on the open, quite solid, sold off. People book profit from the IPO. It's come back down, started finding longer term buyers, starting to step in. Anyone that's potentially missed that IPO, step it in on the way down, or it's starting to hold support. So they're happy to buy it above 30 cents. Whether the IPO's, I don't know, it could have been 25, could have been 20, could have been 40 cents. Who knows? If it's 40 cents, it's sort of cleaned out a few of the IPOs, and it will spend some time hovering. And then obviously it started to take off towards the end of August, started to lift. Probably was watching it here, and I know there's a few guys that did get into it. I missed it, which I'm spewing about, but that's the way it goes. And then it's lifted here, got up through. Where do we get our setup? Somewhere in here. And since we got in, it's actually backed off, but it looks like if this can hold above 50, this is looking good. And we're starting to get that contraction in, but it's holding. If it starts to lift through 54 again, which is our entry back here, then yeah, I think this is not going to be on the move and start trading into new highs, and it can have some legs to it. Because this, look at the stochastics. I know it's only on the daily. It's gone from overbought to oversold up here. So sellers coming in from this leg up. Sellers are still coming in, but buyers are stepping in. So it's gone from overbought to oversold. It's coming down to that 20%, but price is way up at 50 as opposed to down at 34, 32. So to me, this could be a line in the sand. If it starts to lift, great, we're in the right mark. If not, we're going to get stopped out. And I just don't want to get stopped out in a bit of a wash, flush through that 50 zone. But we'll see. So yeah, that's probably about it, guys. All right, I'll probably call it a day. Thanks very much for joining me. Back in next week, and we'll see if we can do some morning stuff at 9:45 again tomorrow morning. So enjoy your day. Thanks for joining me. Any questions on anything we discussed, or if you want to talk about some of your trades, if you're happy to, put them up. I can talk about them next Monday, and then just talk about some shares again. Otherwise, yeah, no problem at all. It's up to yourselves. If you want to have them put them up, you don't mind discussing them, great. If not, we'll speak to you again soon. All right, guys, speak to you later.